Let's go live now to Evan Lucas, Chief Market Strategist at InvestSMART. Evan, good to see you. The worst start on Wall Street in 5 years. It's not the great lead-in that Australian investors would be liking this morning, right?
No, that's right, Laura, and that's probably the way to put it. Is it also feels a little bit like this time last year. If you can remember, last year we had a fourth quarter in the US and also here in Australia that was fairly similar. Reasoning for the drop-off was slightly different. The fears now are clearly moving towards global recession and therefore whether or not it also spreads into the US. We're also looking at it from the point of view that overall monetary policy globally is moving in one direction, and that's to highly accommodative. We even saw last night the president again attacking the Federal Reserve. But Wall Street's move is probably slightly... I'd probably almost go as far as it's been waiting for. Everybody's been waiting for this pullback. The US alone this year is up over 18.5%. Australia is actually over the same amount over the same period. But if you look inside it, the reasoning behind it's pretty limited. And again, it's probably being pushed by monetary policy rather than actually being pushed what a stock market is, which is individual companies all in one little area. And that is all where we're starting to see. So 450 points to go with around about 500 points the day before. You're right, this morning the ASX is likely to see a fairly reasonable pullback again after our 1.2% decline yesterday.
And Evan, what about the US possibly heading for a second trade war with the EU that's been triggered by Airbus?
Yeah, this was fascinating. So everybody's been waiting for this. So last night over in The Hague, the World Trade Organization actually sided with Airbus around a trade dispute. And it basically signals the ability for the US to put tariffs on the EU. And this morning we already saw that being released out of US media. So the US trade representative, Robert Lighthizer, who's the one that's been negotiating with Beijing, and that's been going fantastically well, has it not, is now also putting on the idea of tariffs on EU products, 10% on aerospace. So that means things like Boeing. You're also looking at aeronautical design out of France. These will now see a 10% tariffs on all imports into the US. And then they're looking at putting a 25% tariff on agricultural products out of the EU. What a time for that to be happening when Brexit is going on. And this is all part of the reason why Brexit has talked around trade. And the trade scenario that the EU runs, it's going to be fascinating. And yes, that trade war too, that sort of you're now hearing, it's a fight on both sides, across the Pacific, across the Atlantic. It is only going to get bigger into our 2020 presidential elections. Yeah,
and look, as if we need any more uncertainty at the moment with the ongoing trade war between the US and China, Brexit, now this essentially, is this a good time to remind people that when the US talks about imposing tariffs, it's the people that pay? So with this airline dispute, is it just going to make air travel in the US more expensive effectively?
Probably not, Laura. It's a great question. The reason I say that is this is more around parts that are actually provided to Airbus. And so that would be the way to look at it. It's, again, his argument is manufacturing protection. And that is deliberately the term I would use, is he wants to make sure that any parts that go into American-made and American-designed planes are made there. And that is probably the way to look at it. It would be different, however, the agricultural side is clearly the part where people pay. I mean, yes, the US has a booming, ginormous agricultural sort of sector, but they do and are and have been importing European, Australian agricultural ports for a long, long time because they are seen as competitively having an advantage. And that is where he's trying to close the loophole again. And that's where the people pay, is that all of a sudden the more expensive US agricultural product compared to the European product is now going to be either the same price or the European price will be slightly higher. And therefore, in the end, that's where the pie comes through. It creates artificial inflation, as we refer to it. It means prices move up, not because of actual natural forces, it's because of a tax.
Just closer to home, given all of that information, Evan, and all these problems overseas, and I was listening to a podcast last night, because that's what I do in the evenings, and I noticed that the price of iron ore has dropped significantly from what is $120 a few months ago to $90 now. How certain can our government be that it is actually even going to get to its surplus?
Reasonably, because that drop has been only in the last 2 and a bit months. So yes, you're completely right there, Pete, with regards to the bear market, as we refer to it. It's dropped 23% in the last 2.5 months, the iron ore price. It's still well and truly elevated to analyst expectations and also to the government's expectations on an average basis. So They are and should be pretty confident. We get our trade balance today. It's likely to show a $6 billion surplus over the last month. It is slowing down after our record that we got in July, where we hit $8.2 billion. But again, all of that is adding into the net coffers. It's why growth is maintaining itself just, even though consumption's falling away. So they'll be confident enough. It's the question for 2020. Does it continue to fall? Does it move back to the levels they were expecting to see in 2019 next year? Where does that also put the Aussie dollar? And that's the key part of this, is that the Aussie dollar over the same period, from basically this time last year to now, has fallen 16%. Now, that fall is actually a windfall for us because everything's done and transacted in US dollars, but has to be repatriated into Aussie dollars to therefore actually pay tax and come back to the firms that generate it. So they get a tailwind from that, and that's where our probably we've been supported, is that lower Aussie dollar.